So I just want to touch on a few of those points. For example, there's no loan in a formal factoring arrangement. You have a factoring facility. You don't have a loan amount. You instead have factoring volume. There's no lender. You have a factor or a purchaser of those receivables. And instead of talking about a borrower, we talk about the client or the seller of receivables. In lieu of there being a note or security agreement or a loan agreement, we have a purchase and sale agreement for those receivables. The typical factoring agreement won't have an interest rate associated with it. It'll have a discount rate or a factoring fee. And then our borrower or obligor is really the account debtor or our client's customers. So those are some basic terminology that's a little different from the world of lending. So I just want to get those points out there.